Well, a game changer in the financial world as well. Banking giant Goldman Sachs moving from Wall Street to Main Street. The company has spent close to 150 years focused on large investors. And now it seems as if they are willing to offer money online to consumers and small businesses. The online loan industry, if you take a look at some of the stats, valued at $150 billion. Bob Rice, managing partner at Tangent Capital, is with me now. So, Bob, this seems crazy for anybody who knows the Goldman brand. Remodel your kitchen with Goldman is what I have in my head.
Yeah. It's a little bit like going down to the local, taking your kids to the pony rides and seeing American Pharoah down there.
That's a great analogy.
What's going on? But look, this is welcome to Banking 2.0. I mean, it's online, it's high margin. They do it all with the computers, of course. There's no loan officer. You fix your loan application online. It's processed by an algorithm, approved or not approved, and they see where the future is going, and they want to play.
Okay, so the bottom line is Goldman not doing this out of the goodness of its heart, not for altruistic purposes. It is to make money on lending to the average person, whether it's a bank loan or whether a credit card loan, remodeling, all kinds of uses. But to your point, competing now, right, with these peer-to-peer lenders. Yeah,
absolutely. So the kind of the bad news from an investor's point of view, if you're looking for yield right now in this market, and a lot of people really like going to Prosper Lending Club and making these loans themselves directly and earning 8-9% on short duration, relatively high quality loans. Goldman looks at that and goes, you know what? We'd kind of like a piece of that action ourselves. Thanks very much.
Why not?
Why not? We're a bank. So what we're going to do is we're going to issue CDs at 1% or something like that, take the money and do what Prosper and Lending Club do and lend it out at 8 or 9.
One very telling thing that I thought is that Goldman went out and hired one of the top dogs, one of the top guys from Discover credit card. And the idea is that Goldman is considering issuing some sort of almost prepaid loan card.
Yeah, it's a fancy. When you start to really think about what you can do, you can predict which consumers are going to pay you back. You know what their FICO score is, you know where they live, so you can do all of this in advance and just send them, hey, whenever you get comfortable, just go use this card and borrow from us at these high rates. And so Goldman is using its technology advantage that it has over a lot of the other more standard commercial banks to get into this business first.
So, Bob, I just want to ask you, because the last time lending got so easy was 2007. I mean, what's the danger? As you said, Goldman can evaluate someone's credit score, but doesn't this strike you as a bit, this is getting like a lot of money washing around?
Well, it's a very good point, of course, and it all depends on how good the algorithms are at sorting through these things. But they're getting better and better and smarter. And what they're saying is, look, why go to deal with a loan officer in a brick and mortar store? We can do the same sort of analysis online, save money because we don't have to pay the employees, we don't have to rent the space, and
it's all online. I should have said that. No branch managers, no humans.
Which is bad, and no toasters probably either. But of course, the idea is going to be that the lending rate is lower as a result of that, and they're going to try to compete on that basis.
All right, Bob Rice, thank you as always, a managing partner at Tangent Capital. Well, competition is heating up, and with me now is Kabbage CFO Kevin Phillips. Kabbage is a privately held online lender to small businesses. Kevin, what do you think of Goldman being on your turf?
Well, we think it's actually good. We got into this business because we wanted to create for small business, give them more choices. And what Goldman's doing is really legitimizing this space. As I think you said in the last piece, is that alternative lending is now Main Street lending.
It certainly is, Kevin, but in some respects, do you worry that you just showed, you were one of the companies that showed Goldman what a great idea this was, and now with all their muscle and might, they will take potential customers?
Sure. So, yes, thank you. We did show the world how to use technology and data to make these small loans. I think it's a lot more than a great brand equity, though, and some muscle that Goldman might bring to the table. It's really hard work to make a series of small loans to consumers and small businesses. And we've got 6 years of experience and data in doing this. And we think that it will actually help the consumers, help the small businesses through this process.
So, Kevin, brag a little bit about Kabbage, because in 6 years, I know you built a special algorithm basically to judge how credit worthy a small business is. How many bankruptcies or defaults have you had?
We make loans to small businesses that banks won't touch. So if you were to compare our numbers to a traditional bank, you'd find that they've made very few loans to these sorts of businesses. We've originated over $1 billion of loans to these businesses, and our investors are very happy with the results.
And they, in turn, your investors are being offered a return that they could not get, for example, through the average bond fund these days.
That is correct.
All right, Kevin, we're glad to have you with us. Thanks for the time. Kevin Phillips, CFO of online lender Kabbage.